Please wait. And there we go. We're online. We're going to click the record button as well. This is Bulls versus Bears. Bulls versus Bears weekly Forex Forecast. All right, exciting. It's been on hiatus for a while. Make sure it's recording, and the recording is going smile big. Look alive, ladies and gentlemen. So good to be with you here. And it's awesome. Our coffee hour with Greg, and I make sure you have your coffee. I've got my coffee right here with my Pip Run mug. And there you go. Pip Run. Why buy and hold when you can Pip and run? And we've been pipping and running this week. And having a great trading week. I hope you guys are having a great trading week too. Hope you guys are staying warm. Hope you guys got some sunshine where you are. We definitely have some here in beautiful Las Vegas with right now it's 60 degrees Fahrenheit. So a little chilly, but the sun is out. It's going to be a great day. Okay, let's go again and get started. This is our Bulls versus Bears telecast. What we're going to do with Bulls versus Bears, we're actually going to go through currency pairs and going through the economic news and what can move the markets. So we have a plan ahead for what we're actually going to do. I'm actually going to include a scalping trading map that you can follow. Roadmap to profits, right? Remember, past performance is not indication of future results. And let's go ahead and get the reading view. I'm going to share my screen, and if you could be so kind to let me know in the chat box if you can see my screen as well. And all right. And I'll just go before the Lord. Heavenly Father, thank you for this day and this wonderful fellowship, and open the eyes and minds of the understanding of those out there. Bless their bodies, bless their families, and prosper them in Jesus' name. Amen. Okay. All right. Got the chat there. Yeah, Sean says that was some news you said about Russia may return to the USD. I know, I really think, the system, and I'll get into that, but the whole system was this British system of divide and conquer, keep tribes and different countries fighting each other. And what Trump has, whether you like him or not, he's a peacemaker. He's gone out to say he's a peacemaker, which is contrary to the old world, which always sought enemies, right? So and when you have enemies, well, guess what? Then Great Britain can be on our side. So we're really still a colony under Great Britain, and by going for peace, and uniting, and we have more in common. Like I know John and I have many conversations on that. Yeah. That I think it was you, John. This is I know somebody who predicted Russia would allies in the future. You most certainly did. When we first met, we talked about that there's more commonalities between Russia and the U.S. than a lot of other countries. Because of the Christian, Orthodox Christian values, which I learned from John. So very, very powerful thing that having those two great powers at peace is going to bring a lot for the world. Okay. Anyway, I digress. Bulls versus Bears, Lee Traders University. But that's the underpinning geopolitical stuff. That's what drives currencies and drives money. Because guess what? When they announced that, guess what happened to the dollar? Guess what happened to gold? Right? Russia is one of the largest central banks purchasing gold, part of this new BRICS economy, this alternative payment system that is supposed to not have the U.S. dollar involved and is based on gold. And all of a sudden, Russia announces that they are not going to, they want to re-dollarize, to get back into the dollar system. And the moment they did that, while the mainstream news was talking about other things, this was going on, and the dollar got stronger. Why? Russia wants dollars. And because they wanted dollars, and one of the biggest buyers of gold just says, hey, we're not going to do this anymore, creating this system, right? And then all of a sudden, gold collapses, the dollar rises, right? And there's other things too. We'll talk about those too. But notice how all these things are tied together, right? So when people tell me, "Oh, Greg, I don't pay attention to the news. I just look at price action." Well, you're a fool because because the drivers, it's like sailing a boat, not caring about the wind, right? And there's a storm brewing. There's there's a commercial, an old Progressive or Geico commercial, when there's this perfect storm and there's lightning and this guy is in this boat sailing into the storm. Looks like a great day for sailing, and the two older, more wiser fishermen are like going, "This guy is doomed," and that's what a lot of new traders are. They have no clue. They are a fly in the windshield of geopolitics. Geopolitics is the 80-mile-per-hour freight train or truck, max semi, and your 2-lot order, your 0.1 lot order, you're going to get crushed on the windshield of the geopolitical freight train. Okay, anyway, Elite Traders University. Boy, we got a lot of stuff, and we haven't even gotten started yet, right? Weekly Forex Forecast, bulls versus bears. Weekly Forex Forecast, whether you're a bull or a bear. Be a bull, be a bear, but don't be a asshole, right? All right. What we say, bulls get fed, bears get fed, but pigs get slaughtered. Don't be a pig, remember? Okay, risk disclaimer on your screen. Make sure you understand all the risks associated with foreign exchange trading. And I'm the founder and CEO of the Elite Traders University. I'm a 30-year trading veteran and mentor, and we're going to talk about that 30th anniversary with my a new offer for you guys. But I'm one of the foremost authorities of short-term day trading called scalping. That is my bread and butter, and I've been doing it for close to 30 years, getting in and out of the market fast. I don't like holding trades. There are many people that argue against short-term day trading, but in fact, it is the most cognitively demanding form of trading. And I would advise, and they're correct to advise you to stay away from it, because you really should, unless you have a system, unless you have a program, unless you have a mentor that can help you. Short-term day trading will drain your account and make you broke as all what get up. Okay. Anyway, I wrote a book called The Gold Rush Blueprint Forecast. If you guys remember, I forecasted the price of gold going to 5,000. Most certainly did. And this is when I wrote the book. Gold was trading at like 1,800, and so I wrote the Gold Rush Blueprint, and you can still available. Okay. Anyway, we're going to talk about the agenda, the dollar index, euro, pound, Aussie, and the Forex majors. Basically, we're going to take a look at gold and silver and oil, S&P 500, economic news and world events. And then we'll open up the Q&A, and we'll also answer any of your questions. Thank you for posting questions in the chat as well. And if you are in YouTube, you can participate too. Even if you're not in the room, if you're on school, we'll be able to click the link and jump in as well. Okay, let's get to the charts. And we're beta testing the new simulator, guys. It is fantastic. It's amazing. I actually dedicate the release of the simulator to John, because John has had so much trouble with his computer. I decided to make a web version of the simulator, and it is operational. So make sure for those of you who are Pip Run runners, that's big news. The simulator is a core piece. The core piece of our training is the crown jewel. It is one of the most important pieces of the Pip Run system. And if you would like to have access to that, then join Pip Run, and you'll have lifetime access to that. Okay. For this special 30th anniversary of Pip Run, right? Okay. Let's get to it. Charts. Give me the charts. Okay, charts. Oof. Charts. Okay, we need to change templates, get rid of all this stuff, remove all indicators, remove all drawings, and let's go. We want to go to our daily chart. I like to actually start off with the weekly chart. You want to start that? We're going to start with the U.S. No, we're not going to do this. Where are you doing, Greg? We have my market heat map and a range of currency pairs by percentage change. Right, we're going to start with I always start the economics. Those are the drivers, right? I just told you that economics is very important, right? Sean says Sim looks good. Thank you so much. Yeah, this amazing with technology, what you can do. And I've been trying to relaunch the simulator for how long, Sean? You've been with me for about 10 years. We've been trying to do this for a while, right? This is like the third iteration of the simulator, right? My market heat map is a range of currency pairs or percentage change. It tells you what's hopping, what's popping, what's dropping, what's not. And you can get access it for free. Just go to mymarketheatmap.com, scroll down to the bottom, and you have one of 6 powerful heat maps. And this is the Forex majors. And we see pound is up at the top of the heat map, 0.22%, closing at one spot 3648, right? And we have an economic calendar, and you have to kick it in a little bit. You got to kick it, refresh it, give it a push and a shove, and then there it goes, right? Just refresh the screen, it'll come. Economic calendar, absolutely free. You have access to it. We had non-farm payroll. Usually we have non-farm payroll on the first Friday. We had non-farm payroll like yesterday. It's so weird now, right? And they came out better than expected. Stronger than expected. Many people thought, analysts and forecasters forecasted for 60,000 jobs, and we actually had 130,000 jobs created, and unemployment rate dropping to 4.3%, and so close to very full employment. Many people basically discounted the Trump miracle, the golden age of America. They have discounted it. They have said we're going to have a recession and all this stuff, and the naysayers were wrong. And that also helped the dollar get stronger as well, because there's no need for a rate cut. There's no need for, when you have a strong economy, you don't really cut rates because you'll have inflation, right? Inflation is actually down. We have an inflation number that was down 0.2%. Inflation rate year on year, 2.4%. Getting close to the central bank target of 2.0, and the previous number was 2.7. Forecast called for 2.5, so softer inflation, core inflation rate. Core means ex food and energy, and then we have that release. But let's go looks forward to next week, and we're going to start with. What I'm going to we can do is filter out to the high probability news items. I call this fun with flags. Okay, fun with flags. We just look at the flag and we know what to trade. People ask me, what should I trade, Greg? I don't know what pair to trade. I don't know what to trade. Look at the flag, right? I said flag. Okay. All right. San Francisco treat. Anyway. Aussie, we have rate meeting minutes, RBA. That's going to be very cool. And we won't be trading that because we trade Tuesdays, Wednesdays, and Thursdays in our VIP Asia session trading. But I just love Australian news at 12. That's 7:30 Eastern time. It's going to be great to trade the Aussie dollar. Then we'll take a look at that. Then Tuesday, we have lots of UK data. Look at the flag. I want to trade the pound dollar. People say, well, news is volatile. Yeah, we have a news fade strategy where we actually wait 30 minutes after the news event to get into a trade. That's if you don't have the Pip and Run strategy. If the Pip and Run strategy with the predictive function, you're able to actually see institutional order flow and be able to get in before this announcement. Like I did the Aussie announcement last week. We're able to get in and make money before the announcement. It's almost like having someone on the inside at the Reserve Bank of Australia giving you information, right? Which is totally illegal. But, in fact, there was a guy that was busted for using his iPhone and transmitting the data to traders ahead of time. But when you have Pip and Run, you don't need a guy on the inside. Okay, 5 a.m. we also have some German data. That is the ZEW Economic Sentiment Index. We're going to rise from 59.6 to 63.5. even though we don't trade the Deutsche Mark anymore, we do trade the euro. Germany is one of the economies in the eurozone. It's one of the largest economies in the eurozone. So whatever happens with Germany is going to impact the euro. So we want to look at how the euro reacts at 5 a.m. on February 17th, a Tuesday. At 8:30, which is our normal U.S. news cycle, but North America, that's going to be Canada as well, which may soon become a state. Might change flags, right? At least Alberta is thinking about becoming the 51st state. They're having a referendum that's very important. Keep your eyes on that. Alberta is one of the most prosperous regions in Canada, and they have lots of oil production, lumber, other things, and they are tired of backing weird socialist projects that don't work. They basically subsidize other provinces like like Quebec and other provinces. Money is taken from them and redistributed, called the equalization payments, which is totally unfair, right? The whole redistribution of wealth. And so Albertans are tired of that. And so we're seeing some major things. Trump has been in talks with Alberta, and they're thinking of breaking away, becoming independent, and they could be a 51st state. So anyway, inflation rate is rising there in Canada, and we see a forecast of 0.4. CPI, we see CPI, I think it stands for Consumer Price Index, but the I stands for inflation. We just think inflation, even though they say index. And when you see higher inflation, you usually see a higher currency. And so we see, and we really care about these numbers. We care that there is going to be money being traded around the Canadian dollar, whether it's CAD Swiss, dollar CAD, CAD yen. We can look at the Canadian dollar as where the action is. So if you're trading, the Swiss franc or something, and it's not moving, it's because the eyes are on this. Okay, this is where the we need volatility. We need the wind in our sails to make the boat go. If there's no wind, I tried flying a kite with my kids on the beach, and there was no wind. So I'm running with this kite with my kids. They're like laughing, and the kite's not going anywhere. Why? Because there's no wind. And sometimes when you're trading and you're trading something that's not moving, it's moving in a sideways channel, it's because there's no one's interested in it. And so at the announcement, there's going to be way too much interest. You're going to have this thing flying everywhere at 8:30, right? But if you wait till like 9 o'clock, there's still going to be interest in this currency. It'll settle down, and it will provide you with wonderful trading opportunities. Okay, so you want to put the Canadian dollar on your radar and in your watch list for Tuesday. Lots of data. Also, here the New York Empire State Manufacturing Index supposed to drop from 7.7 to 7.1. That's going to be a dollar story, but when I see dollar flags, I always trade the euro. The euro is called the anti-dollar. In fact, the euro is like the United States of Europe, is a group of countries that came together as a counterbalance to the U.S. dollar. So if we get strong data here, it's usually bad for the euro. And if you get good, if we have weak data here, it's usually good for the euro. Later on in the evening, we've got one of my favorite currencies to trade is the Australian dollar. We have, and Japan, we have balance of trade, Australian dollar wage price index, and it's supposed to be about the same. And they have and New Zealand has an interest rate decision. So we have a central bank interest rate decision. Central bank interest rate decisions are one of the major drivers of currency movement. Central banks determine where their interest rates are going to be. If they're going to hike interest rates, it usually makes the currency go up. If they cut interest rates, it usually makes the currency go down dramatically, 40, 50 pips at the announcement. It's widely expected that the RBNZ, which stands for Reserve Bank of New Zealand, and my boss used to call it Royal Bank of New Zealand, but it's Reserve Bank of New Zealand. They're widely expected to keep rates unchanged at 2.25%. And 2.25%. Now, if they keep rates unchanged, they don't cut, that could still be considered bullish, right? But again, you want to look at the dollar, the DXY, or the US dollar index is in the driver's seat. So we want to see where the dollar is. The dollar is strong and trending. we might see a sell-off, right? And we have a press conference following too. So if you want to wait, if you don't have access to Pip and Run, access to the predictive function, then just wait 30 minutes, and you'll be able to catch the crumbs. The crumbs will be pretty substantial. But if you have Pip and Run, you should be able to use the predictive function to game this. Okay. Moving on to Wednesday, February 18th, we have UK flags, all UK. Core inflation rate. That's like the second largest movement for currencies is inflation numbers. Because why? The central banks look at the inflation and decide whether they want to raise interest rates or lower interest rates, right? So higher inflation usually is good for the currency. Lower inflation is usually negative for the currency. So we see a 3.2% inflation rate dropping 3.1, and core inflation is supposed to drop from 0.3 to 0. Core inflation means X, or they remove volatile food and energy from the number. I use food and I use energy, as you can tell. So I don't understand why the core is actually used, but it's used, right? So anyway, February, basically all Wednesday, we want to scalp. If we're scalping, they're trading the pound. The pound is going to be in play. Later on, we have some U.S. housing starts, so that gives us the euro. Housing is a big driver of the economy because when you buy a house, you got to buy carpeting, you got to buy furniture, you got to get it fixed. You've got to toy it out, pimp it out. So housing creates a ripple effect in the economy. So big housing numbers going up. That's usually good for the currency. And then we have FOMC minutes. Okay, and FOMC stands for Federal Open Market Committee. That's the U.S. Central Bank, Jekyll Island, and they are going to basically tell you why they cut interest rates or kept rates unchanged. And that usually is pretty volatile. It's happening at 2 p.m., guys. So what happens sometimes, the market will get dead ahead of this. So if you're trading, market hours 8:30 a.m. New York time, you might see the market not move very much until the Fed speaks at 2 p.m. that day. So that's like a sleep-in day for me, but every day is a sleep-in day for me, except for today. And then we have lots of Australian data on Wednesday. That's going to be very, if you're not part of the VIP group, VIP live trading on the Asia session, this is going to be Party City. I'm so excited. Aussie employment change, and usually the numbers are big. I don't know what those guys are doing over there. They get the numbers wrong. I mean, look, the previous number was 65.2 thousand. They say it might be 20. If it comes out at 60, the Aussie is going to rip higher. Unemployment is going to tick up from 4.1 to 4.2. Participation rate slightly changed from 66.7 to 66.8. And full-time employment change 54. Look at the swing, 54.8 to 10K. They seem like they juiced their numbers down so they could beat the number on the next side. So I'm looking at this as like, this looks very much manipulated. 54.8 thousand to 10,000. You're going to lose like 44,000 people overnight, right? So they're going to probably come out with a big blockbuster number, and we might see Aussie dollar blow up above 71 next week. Thursday, we have ECB Windows. I guess he's some type of central bank official at 6:30. And then we have U.S. initial jobless claims. And that's volatile. This is a weekly number, 227 to 225. Again, I'm looking at the euro. Friday, lots and lots and lots of UK data. Retail sales, probably the third largest driver. We're 80% of our world economies, the GDP consists of retail sales, right? So higher numbers are usually good for the currency. We see possibly a negative number for UK. And then we have a bunch of data on, this is data Friday for the 20th, lots of stuff. Eurozone. I'm not going to go through every single one, highlight the major ones for you. They're all major, but retail sales, PCE, very important. That is the core PCE inflation index, right? There's supposed to rise from 0.2 to 0.4. Personal spending is very important. PCE, GDP, is backward looking because you've got all the other data. I mean, this is crazy. So the euro is going to be very much Michigan. We're going to finish off with Michigan consumer confidence, S&P global manufacturing PMI. Yeah, it's going to be a very, very powerful trading day for that Friday. So I don't normally trade on Fridays, but with all this lined up, there was some juicy stuff out there. Okay, so let's jump into the technicals. We'll start with the dollar index. Dollar index is a basket of currency pairs trade against the U.S. dollar. And we can see that the dollar is in a big sideways consolidation channel. Clone that line. And we can see we're just a big sideways channel here. We're just but we have within the channel there are trends, and we have a downtrend, but we also have an uptrend. It's not that easy, right? And we have it's forming kind of a triangle of some kind, right? So this is where we are. We have this indecision, red bars, but we're approaching support, and so you understand that the charts are a discounting mechanism. They're discounting what's already out there in the news and all the insider stuff. Some congressman has access to all this stuff, or some global official, and they exchange data, and Reuters gets data and stuff like that. So a lot of the stuff is already priced in. They tell their friends, blue horseshoe looks Anacott steel, and so we got to look at these candlesticks and try to discern where the insiders or the smart money is actually moving their money, right? This long wick tells me that they got a little bit ahead of themselves trying to short the dollar. The rumors of my demise have been greatly exaggerated. I think Mark Twain said that. So the death of the dollar has been widely over exaggerated. They start talk about gold and silver and Bitcoin. And notice that Bitcoin is in the toilet too. We'll talk about that. And silver and gold aren't doing very well. They're just moving sideways and chopping. So again, the dollar is still the beast, and Russia wants dollars too, right? Okay, so let's drop it down to a weekly chart. And we have, now even though this is a downtrend here, we do have a triple bottom on the US dollar, right? And typically around this time, seasonally, the dollar is strong anyway. If you go back several years, the dollar is strong around this time, as people have basically drank the punch bowl back in November and December. Christmas is over, got to pay the bills back. And so there we go. Triple bottom there, small body candle, inside a harami, walk it down to a daily chart, where the bears have basically maybe run out of steam, and we may be looking for a 1 and a 2 and maybe a move back up here toward this the 98 area, right? So bulls versus bears, I'm it's kind of hard because this downtrend and uptrend, right? I am cautiously bullish on the dollar index, right? But for the most part, we're in a really sideways channel, and countries, independent, separate countries like UK and Canada are going to have their own problems individually against the dollar, and you're going to have pockets of strength against the dollar. Like you're going to have the Aussie dollars. You're not going to have this united front against the dollar. It's going to be kind of fragmented while the dollar moves sideways. Okay, let's go ahead and move on to the euro, the anti-dollar, and we'll probably see something similar, right? Where we start off with our higher time frame. This is our 50,000 foot view of the markets, our 50,000 foot view. So in our 50,000 foot view, and I think I might have created charts with but I'll show you how to do this, right? Every wick you see, I put a line on it, right? And then that way we have our boundaries. And I know that I did this last time, but you can see we're making higher highs and higher lows on the euro, but in the context of a larger downtrend, we're really in another big triangle, right? And central banks don't want their currencies to get too strong too fast. They don't want it to get weak either, because a super weak currency creates inflation. Because your currency isn't worth enough to buy anything. So guess what? You need more of your currency to buy stuff. So they want to, if they can keep your currencies in a range, it buys them time while they, try to bring their deficits under control, which they are not. And you can see that we have this downtrend and we have this uptrend, and so we're having the bulls and bears are basically at a, kind of like in this range, right? Low of 95.10, high of 125, and we're somewhere stuck in the middle, right? We do have a rising uptrend channel right now, but we are approaching a Gartley bearish butterfly pattern, and I'll show you what that looks like. What I see, the patterns and ABCD pattern, like that, right? And this is a bearish pattern. It usually we have this an AB equals CD pattern. It's a Gartley pattern where it does not make a double bottom. It does not make a lower wedge, but it's I call it popping a wheelie. It's like someone on a bicycle, and we have like a car. The tire, one tire is here, and the other one is popping wheelie. And when it pops the wheelie, usually there's a crash, right? That's our bearish Gartley ABC pattern, right? That's the right. And then we're coming against old resistance. We have a highs of 2018 around the 125 area, lower highs here, and we're making lower highs. Structurally, we're making lower highs. So even though we have a little higher low, we have a lower high. And so we may top out here and maybe start heading back down. And that would be so bulls versus bears. I am constructively bearish on the euro, right? They still might have some, we do have a supply zone overhead that I can see. I can point that out to you. And there we go. We got this supply zone. We barely tagged it. We wicked into it and pulled back. There was some overhead supply. Buyers stepped in. Supply came down and said, no. And so now we have this candle. I'm going to make that bigger for you guys so you can see that. But I say, Greg, I can't see what you're saying. See that wick right into that channel, and then boom, right? So I think we bulls versus bears, we're going to go down. Okay. Okay, let's go right to the pound and go across the channel there. Take a quick gander at that. Pound has rebounded from that. It seemed like the whole Epstein thing was kind of short-lived. This drop was the queen. Actually, the queen, when the queen passed away, they actually pushed price down, right? And then this was I call it the King Charles rally. When he was coronated, we had a rally up, right? And they'll do that. And back when the Queen Mother died in 2003, they take their currency down as a form of honor. Oh, more. So can you believe that? Like they will do that for their monarchs. Take the value of the currency down, screwing you, right? If you're long. Yeah, we have another triangle there. But we have higher highs and higher lows, but we also have lower highs and lower lows, right? Up to a point, right there, right? So we have a wick, 2 wicks we can connect, and so either this trend line is going to form a barrier and price is going to drop, right? And we can retest the lows, probably not. We also we break out and come up on these highs, right? 42.84. We're trapped, and this is a monthly chart, so we'll fine tune this. But again, the big wicks, the big turning points are classic. These are classic support and resistance levels. When you add Fibonacci to them, you'll see a confluence of where Fibonacci and and classic support and resistance meet. But usually where price is rejected and turns, that is where we have our typical support and resistance areas, right? So we're turning on this area here, which was kind of like support back here in 2016. Price has a memory, all right? And so we would drop down to, this is our, maybe our satellite view, our Earth view. Now we're going to go 50,000 foot view, right? And we can see that we are making higher highs and higher lows structurally. And then we can, so from here, I mean, from the weekly chart, we are bullish, and our bearish bets did not pay out so well. Our daily chart, on the other hand, though, is we're seeing, price did rally up in January, and we're probably some type of an ABC correction, right? An ABC correction. We have our A, our B, and our C could retest 35.11, right? And we also have a indecision doji right here, and prices moving off of that, right? And I know the candles I'm using, you're probably not used to. I'll go ahead and switch those back to your traditional candles, and there you go. There you go. Massive, right? So we're stair stepping down, and so and then we have this lower trend line that we're rallying off of. This trend line here, right? And I'm gonna put Ray on, like Ray there, right? And then Ray again, right? So a break, we get below 35.88, look for a retest of 35.11, and we can probably come down to support 33.38, right? So bulls versus bears, just to give you an idea, we are constructively bearish, but we want to see some trigger points, right? So let me show you what those will look like, maybe on a scalping map. I can't scalp map all the majors in the amount of time that we have together. Well, I'll take a fib from the low to the high on the daily chart, and I'll show you a good trick here. And then we're going to drop down, keep these lines here, and we're going to go. I'm a scalper, short-term day trading. I'm going to go down to the 5-minute chart, right? And I'm going to go down the 5-minute chart, and I'm going to see key areas. This was this 36.64 was a key area for scalping. And then we have this trend line down here. So we're actually between areas where, if we move back up to a 36.61, I'll be bearish. I would actually create a supply zone across the top there. And I would look to, we already had a rejection just below. I would be constructively bearish with a target of this old low 35.92. So I would scalp, as long as we, right now we're making higher highs and higher lows. We would need to break some structure to be able to take this short. So a double top at this 36.52 would probably be what I would look at doing, right? But if price rally into this area here, I would look for shorts. And if I bounced off this area, I would look for longs, right? So there you go. So bulls versus bears, bearish. Okay, moving around long. Let's move on to dollar yen. Move on the other side of the world here. Here's dollar yen, 50,000 foot view. Even though I'm a short-term scalper, I want at least, just like you look at your mirror. You don't drive looking out your mirror, right? But you do glance at your mirror, right? And this is the mirror. I look up, in my mirror. I look, side. I'm situationally aware of where I am in relation to the higher time frame price, right? And we have news. We have a Japanese prime minister who is hot. I mean, hot as far as very popular and very, the yen, the stock market hit 58,000 for the first time, and we're seeing the yen catching some swagger. And maybe they're not so apt to devalue their currency anymore. They really don't have a lot of room. Their debt to GDP ratio is over 200. And usually you get to 200, you're going to like default mode. You're going the way of Argentina and stuff like that. So they're in a very precarious position where they really don't have a lot of room to keep devaluing their currency forever. So they're going to probably start raising interest rates and allowing their currency to strengthen. And this is the dollar versus the yen, and we can see that that we have a topping formation, like head and shoulders. Usually, a clean trend is higher highs and higher lows, and a stair-step pattern. This is not doing that. These waves are overlapping, meaning that the trend is getting tired, getting exhausted, and it's a shortable. And I would only short this on the short-term charts for a short time because there is negative carry. We have Asian holidays going on right now. It's going to be Lunar New Year, Year of the Horse, and if you hold something on a Wednesday, it might be 3 times swap or 7 times swap if there's a holiday going on too. So I would, before 5 p.m. Eastern time, I would exit any yen trade to avoid paying that swap interest, right? We are approaching some support areas on the 4-hour chart here, right? But I would suspect that we made these lower highs and lower lows, right? 1, 2, 3, big 4, 5. We could drop and maybe drop to some of these other support areas here. There's a gap down here, which you really don't see gaps very often. But there's a gap that's unfilled at between 149.01 and 148. Now, according to gap theory, which I've seen a lot of gaps, sometimes they never get filled. But as this is topping out and heading down, that could be a magnet for price to come back down, fill that gap. We're at 152.85. We could probably scalp this down to 47.75. Okay. Something to look at. So bulls versus bears, dollar yen. I am bearish. Okay. All right. Let's go ahead and move on to one of my favorite currencies is the Australian dollar. Hey, there he is. Adrian. And good day to you. Or good evening to you. It's nighttime. In London, it's over there at 5:45. Hey, it's not that late. Move all drawings. Okay, we'll start our 50,000 foot view, the Australian dollar. And here we go. We've got some key levels of support coming in here, right? And what I really like it is we're breaking out from this from a sideways channel. We're breaking out. And the Aussie is, Australia raised interest rates. They are seeing inflation. And when you have inflation, that usually means, your currency will have to strengthen to fight inflation, which means that if we're buying, we won't be long this breakout, right? Currencies usually trend in the direction of their interest rates. And the RBNs, the RBA, Reserve Bank of Australia, recently raised their interest rates 25 basis points. And we can see that we broke out of this and with very strong candles, right? We do have lots of resistance to encounter, but we're seeing that each level we're pushing through those levels with a great amount of ease. Right. And so we're at the currently at the 74 area. There's a big gap of space here between 71.85 and 76.65. So I am, without even going down to lower time frames, this is very strong. If you're stacking up stacking green candles on the Wednesday, on the weekly, your daily is looking tremendously good. Gain a little bit of a pullback on the daily, which is good. Every trend needs a little bit of a pause. We get higher highs, higher lows. As long as we stay above 68.75, we should be good. Next green candle, break above 70.93, we should be good. And we break above 71.86. We got this big amount of space here to fill, almost 500 pips. If I were a swing trader, this would be my currency I would swing trade. Triggers, if you want to drop down to a 5-minute chart, look for a scalping map. Any type of breakout, we have a nice double bottom here, and we have a gap down from the 71.33 area. We had lots of consolidation there. So this is, I'll show you the gap. I'll enlarge it so you can see it, because you can't see it. Forex candles, sometimes they have a physical gap with no candles traded. Sometimes they just have a really long bar. When I worked at the brokerage, I had lots of questions because I was a retail trader, and now I'm working behind the scenes, right? It was so I value that. That was a very valuable experience, because the CEO was very open to answering questions. In fact, we would correspond via email and text, and so being able to because I had a deep as a retail trader, many of the people who actually work at some of these brokerages never trade. I was very surprised. We had a group of my friends that trade, but a lot of them didn't even understand. So the CEO talking with me was very important. It was very, very instrumental in me building Pip and Run. In fact, it was his suggestion that I do Pip and Run in order to promote the brokerage, because I had such a high winning percentage that he said, if you just stream your desktop and show off your trades, we could get lots and lots of customers. And I go, okay, are you willing to do that? And will you do that live in Las Vegas? That's why I'm in Vegas, right? That I was able to do that and do that with very quickly, very easily, very routinely, that people actually wanted to join our brokerage, right? As a result of my trading, right? So when I can just show results like this, when I can take $100 and turn it to $1,000, with a 98.5% win percentage, right? That this is something special, guys. I'm not bragging. I'm just saying that this is why I asked the CEO, I go, when I see a big candle like this, how come I can't get in or out of the trade? And he goes, there is no price action in that candle, because there's no one willing. There's a buyer's strike. No one is buying. So you may have a stop. I'm going to put my stop right below the swing low, and you won't get filled. Why? Because the market's in free fall, and basically there's no buyers on the other side. And so this is a gap. If there's no buyers, if I went long here, I have my stop, and I get filled, I exit my trade here instead of here because there's no one here. That tells me that that's a gap, which means, according to gap theory, we should see an upward move with the same velocity and strength in the other direction. And I wouldn't have known that, and you probably never have heard that, because I learned it while I worked at the brokerage. And they're in the brokers they don't share information except for people on the inside. And me being an insider gives me that unique perspective that a retail trader will never ever get, because they're not, with AI and things like that, they're not even hiring people anymore. Right? So this is what we're looking at. Anytime you see a bunch of candles, vertical candles, that usually means that there is a buyer's strike or a seller's strike. And if you see price moving up, you're basically going to have what the rule of symmetry, right? And usually symmetry means the time factor too. We can take the time from here to here, and the time from here to here will be equal. However long it took to do that, right? It took, we should see that happening very shortly. So bulls versus bears, I am super bullish on the Australian dollar. And in fact, with gold acting kind of funky, it's my new gold. Aussie gold, baby. Gold Coast. All right. New Zealand dollar is pretty much the same way. It's kind of like its little stepchild. I'm not saying that, but I love trading New Zealand dollar too. Those are my two favorite currencies to trade. Look at that. Yeah, don't call me a stepchild because look, the gap is already filling right now. Right. So I say cousin. How about that? So we're seeing. Look at the price. Look at the price gap. I'm on a 5-minute. What's going on with me, Greg? Clone, right? And then, come on. Right. So we're getting pricey out prices gapping and filling that. So yeah, I might even trade that tonight, or not tonight, but after we get offline. Okay. So I covered those currencies there. I'm bullish. I'm very bullish. Kiwi dollar. And if you go to the daily, you'll see the same kind of price action, right? Where we have a very strong bottom that was put in over the course of 6 years. 6 years is bottom play. If you go back here, but here, boom, 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 triple bottom. Very rarer than hen's teeth. We have a higher low. And we can see 63.42, but that's 300 points away. Yeah, if I got a nice pullback, and if you are inclined to be a position trader, you can get some positive carry, and you could get a pretty good entry here for a big move. You can see almost a big head and shoulders moving through here. Okay, let's go ahead and move on to dollar CAD. Let's go to North America, and then we'll circle back to gold. Dollar CAD is kind of murky, but I think it's been in a range for so long. I mean, it's been in a range for like ages. I mean, this range here has lasted. I was in the brokerage when this range. I was still working or just left, and we've been in this range from 120 to 146. So we've been there for almost 10 years, right? And so it's been basically they've frozen the currency to keep it from getting too high or too low. And we're coming off of resistance here, and every time we hit that area, that 146, we usually come all the way back down to 120, right? But we are facing some support right here, right? Kind of like a double bottom there at 35.98. I'd like to see it break this area of support for a move back down to 120. We could scalp it short, right? And I can see a projection for this coming back down to 127.05 if we can break the low. They want to wait that for that 34.44 to break, and then you'll have access to 27.04, about 300 pips. No, it's like 600 pips down there, right? It's been coiling up here for a while. We also have bearish head and shoulders going on too, right? We have a shoulder, head, shoulder, right? So that could bulls versus bears. I'm actually bearish dollar CAD. Yeah. And it's been topping forever, but we hit this high, we usually hit back this low. I mean, optimistically, I would gather to see past performance not indication of future results, but I would probably see this say, why would the currency strengthen? Well, Canada does have a lot of oil and resources, so it'd be very interesting to see if Alberta, if they do a breakaway, which currency are they going to use? Are they going to use the U.S. dollar, or are they going to keep the Canadian dollar, right? And if they do, it might unlock the value of the Canadian dollar and cause the Canadian dollar to appreciate if Alberta breaks away and keeps the Canadian dollar. Okay, so this could be a big Alberta play right here. Okay, great. Gold. Let's take a look at gold. Right. Look at that chart. Looks so fantastic. But look at that. It's a hanging man. And remove that. You know, you've probably heard of the Burning Man. That candlestick pattern there is a hanging man. And you rarely see them. I haven't seen one in years. That you know, it's like a guy hanging. Right. Hanging man is usually a bearish pattern. They got like a shooting star, almost inverted hammer, right? Buyers got here, pushed down. Sellers got here, pushed up. So now you're at this decision point where, you know, we really haven't had a meaningful correction. A typical 38% retracement is what I talk about in my VIP room. Usually price comes down to an area of support. Area of support. My red line is usually support 38.85. Wow. That, you know, we could see something like that. If we don't retake the high, we might have a three-wave correction. This may have been our A, B, and we have a C drop. You know, so I am actually, you know, even though we have a very strong trend, I'm going to go out on a limb and be bearish gold. Look at this chart pattern. Here's our weekly, walking it down to our daily. AR1, BR2, CR3 later. This is the way I forecast a lot of my price targets. Oh, and the 100% expansion is at 38.83. Did I call it? Ooh. So that gives us a whole lot of short going on. I know it's kind of hard to short because of where price is. Right? You have a lower low, you have a lower high, you would need a lower low to confirm it. Really, confirmation comes below 43.96. But you could probably take a low risk opportunity to even you know, take that. That's a 6.8 to 1 risk to reward, right? If you set that up for a swing or a position trade. I would probably look for scalping shorts against, you know, against the trend, because why? We have basically broke structure. We do have a higher low, but we have a lower high, and against a very strong uptrend, I might, you know, risk a little bit. Now, if I get stopped out above that, hey, all bets are off. But I'm willing to risk this to make this, right? Bulls versus Bears. Bears. Okay. Silver may be similar. Yeah, I mean, we have the lower high, but it's probably a lot closer to finishing. It's in fact, I think silver is actually bullish looking at now, right? If you guys, I do Elliott wave counting, but I have my way of Elliott, which is different. Regular Elliott wave, I think you just lose. I think it's a losing proposition. But if you do basically Greg wave, here's your ABC, three-wave correction. And what do we have? Looky, little brown cookie, as Jamie would say. A or 1, B or 2, C or 3 later, 4 or 5, right? I'm like, as long as we can stay bullish, we're bullish above 63.90. If we can, and in fact, they announced it. JD Vance said that strategic moves will be backstopped by the U.S. government to keep China from jumping in and dumping cheap products on, you know, to break the market and destroy our logistics distribution system. You know, like they do with steel, they'll dump steel, and all of a sudden our steel manufacturers can't compete and they go out of business. So they said if they basically put a price floor into it, right? Why? Because silver is now a strategic. What's different than gold? It's a strategic metal used in AI used in this is the solar cell thing I have right here. That's silver, baby. There's they use for solar cells, solar panels, laser guidance systems, Tomahawk missiles. I mean, once you use a Tomahawk missile, it blows up. You lose that silver. So silver has been designated as a strategic mineral that's going to be protected. And so this is the price floor that JD Vance was probably talking about, that we can actually see on a chart that they are already behind it. And if this is wave 2, your duty, what we teach in Pip and Run, is your goal is to find that wave 2. And we can find it reliably using a combination of indicators that I have proprietarily put together to find concretely. If you knew this was 2, you would back up the truck. Okay. Anyway, enough of that. Enough of selling myself and touting my abilities, John. Okay, gotcha. Okay. Anyway, guys, it's 10 o'clock. I'll see if there's any questions in the chat box. And let me go ahead and I'll stop sharing right now. I was going to go to oil. Let me go to U.S. oil one last time. U.S. oil. And 50,000 foot view at the monthly level give us this big high arching view, and not much going on here, but we do. This is a wave 2 too. Something's going to happen. Seems like we got a double bottom here, 55.83. We can see a launch back to 126. Something's going to happen. Don't know what it is, but we're holding. You can see the sacred math, kind of like we're holding levels. We're holding the 50 back at a double bottom. Expansion takes us to 186.49. I don't think we get that high in oil, but we have an inverted head and shoulders on oil. And usually, to get something like that, we might have some type of geopolitical thing. Maybe we attack Iran. Maybe Iran attacks Saudi Arabia, destroys their refineries, and we see oil shoot up. And that this tells me that they're planning on taking oil higher. Oh, I'm glad I took a look at that. The stuff is check oil. It's like, I don't want to check oil. Oil's boring. Yeah, but they're getting ready to take it up. All right, you heard it first here, guys. Bulls versus bears. I'm bullish oil. Right. Yeah. All right. Bitcoin. That's the one. One more. The BTC. BTC. Yeah, this is all cleverly designed. There we go. And after hitting a high of 126, we dropped down to a low of 60.29. I think we got 50. I thought we had 57 somewhere. But look at all the. It happened. Look, each fractal looks the same as the other one, right? And we even just take this old area of support. Oh, old. Come on. No. Remove. Take this old area of support right here, way back in the time. Right? We're sitting at the 50% retracement of Bitcoin. We might want to start nibbling at it a little bit. There's a 618 down at 47,395 where there was a hammer down there. Maybe hammer time, right? We can get down there. If we get a double bottom right there in that 47, you pull the trigger for a move back above 126. But right now, I'm bearish. Short term, go to a weekly chart. We can see that momentum is slowing. We have a hammer at the 50%, a little bit of retracement right there. That's telling me that we are almost ready to launch. We did we might have finished our head and shoulders. We did a head and shoulders target, like here to here, and clone it. And do we have more to go? That's the king from the neckline. Ooh, 27, 21. I don't think we'll get that far, but we could, right? I would nibble at Bitcoin a little bit. Okay. Anyway, I'm going to check for questions. I know I took a little long. Hopefully this was useful. Too chill for oil. That's what you think. It's gonna blow. It's gonna blow. Anyway, any questions here? Yen moves due to Japan elections next week. We'll go back to normal. That's a good question, right? I think with the stock market. Let's take a look at CNBC and take a look at the stock market, right? Because if we're in a bear market mode, right? Okay, see, we're rallying on Friday. We might see a with dead cat bounce. We might see a rally going into Monday, and then let's look at the Asia session overnight. I mean, Nikkei got hit. I mean, it was up 58,000 or 56,000. Yeah. So AI fears are hearing. So it may not go back to normal. I think that might be the new normal. We are going to be moving into the yen repatriation. Usually starts around March, April. And so we might see some continued movement, weakness in the yen, right? Yeah, Putin is an Orthodox mystical Christian. That's what you said. Yes. And okay, well, I don't see any more questions. But again, thank you so much for joining me. I just want to, again, direct your attention to our opportunity for 6 weeks. 6 weeks here with me for Pip and Run. You can get access to award-winning a top trading system and mentoring and coaching for just $19.96. 3 days left, and we've got half our seats sold. So don't miss this opportunity. My daughter's only 30 years once. She'll probably be 30 forever, but we're not going to have this type of pricing available moving forward. So don't miss out. I look forward to seeing you. It's Dr. Greg McLeod signing out. Peace and pips. We'll talk to you later. Bye. You're welcome, John. And I'll get that recording to you as well. All right, we're going to bye.